Wall Street Journal article today of why stocks are shrugging off Moody's downgrade. A couple of opinions here is the Moody's downgrade doesn't tell investors anything they don't already know. The frog in the boiling pot analogy. The tax and spending bill being a bigger issue right now. And some people think the downgrade was just a coincidence. I'll give you my opinion. I mean, everybody has an opinion on this stuff and nobody really knows macroeconomics perfectly. But there's a very simple explanation, is that money has to go somewhere, and there is no other place for money to go other than U.S. Treasuries in the event of an extreme financial crisis. My favorite saying during the 2008 financial crisis was that all risk assets correlate to one. There is no such thing as diversification in a true financial liquidity crisis. Stocks, bonds, crypto, gold, commodities, it'll all correlate to one. And the only asset that actually rises in value during a true financial crisis, I'm not talking the 20% drawdown we recently saw due to the Trump tariffs, but like a real, Great Depression looking financial crisis, are U.S. Treasuries. They're the only safe haven. So while people talk about that 5%, yield on the 30-year, indicating that people have lost faith in America or that people are afraid of inflation, the other side of that is people aren't concerned about a deep, prolonged recession. Here's what Treasuries do in a deep, prolonged recession. Here's 2008, and you see clear into 2012, where even for a brief period, Treasuries were going negative. So there's no doubt, I'm not saying that the tariff policies haven't whipsawed Treasury rates a bit, and inflation certainly has been nasty in the last few years, and there is a specter of stagflation. But just as important as all that stuff, don't forget, the reason you own Treasuries is for risk off. It is the only safe haven in the event of a real crisis. Ironically, if everything goes to hell in a handbasket like people think because of the tariffs and deglobalization and whatnot, ironically, the only safe place to be is Treasuries. Now, I'm not saying Treasuries are a good investment. They are not a good investment. They are purely in your portfolio an insurance policy against the very worst outcome. Gold will not be that insurance policy. Crypto will not be that insurance policy. It will be the 10-year Treasury. And you're honestly only paying just to get your money back. You may even be losing money, but getting your money back, having any liquidity, is worth everything in a true financial crisis. And as I said at the beginning, money has to go somewhere. So money all over the world, the trillions of dollars all over the world are thinking this way. In a true financial crisis, they need to be able to get their money out. And Treasuries will continue to be the deepest, most liquid asset in the world.